Hi, this is Mac with PriceActionTradingSystem.com, and today we're going to talk about congestion and how to trade congestion. A lot of people have problems with congestion, but the first thing I want to explain to you is this little area here is what I call congestion. And all congestion is a small trading range. And here's an actual trading range, one that's big enough to possibly trade and make some profits off of. It's pretty tight actually, but this is a trading range, and this is no different. It's just one bar ranges, and that's what I call congestion. Here's some congestion. Here's some. Here's some. This is really a trading range, but it's close enough to be congestion. And so first things first is just understand what congestion is. It's just a small area of a trading range that's just real tight and real small that consists of a few bars. And the only rule that I use for determining what is a trading range or what is congestion is the following. If there's three or more overlapping bars and at least one of them is a doji, and if you get to four or more overlapping bars, regardless, then it's a trading range. But you'll almost always see a doji in there. And a doji is just these are dojis, these little bars here that are just, they have no trend to them. They open and close. They got stems on both sides, basically. That's a good way to describe it. This is a trading range because you got 1, 2, 3, 4 overlapping bars right there, and really these still have overlap, and at least one of these is a doji. Anything that's got stems on both sides, that's close enough to be a doji. This is a trading range. But the way to find these little tight congestion areas is just to look, and if you got three or more overlapping bars. Now let me clarify overlap. Notice all these bars coming down through here and up through here, they all overlap. But what I'm talking about overlap is that they're side by side stacked up like this. They're not going in any one direction. They're just stacked up side by side. And you can see the strong resistance right here and the strong support right here. And let me show you this, what happened. Prices came up here. We made this little range. And notice what happened. Every time prices got to one side or the other, they bounced to the other. And finally, what did it do? It broke out right here. Notice how it kind of broke higher. And what did it do? It failed and turned down, and then it breaks out the low side, and what does it do? It fails and turns back inside. That's the perfect example of why you don't enter. Guess what would have happened if you entered here? You entered at the very high of this range before it sold off. What happened if you entered on the breakout down here? You entered short at the very low before the market rallied. And look how it ended up going. You can't afford to trade that way, and that's what will happen more times than not. The only way to trade a breakout is to wait on the pullback and make sure you find support if it's breaking out the high side, or if it's breaking out the low side, that it finds resistance once it gets underneath. And I'll show you some examples of how it does that. And really that's what happened here. Notice that this was the highest bar right here, so I put that line there. Notice what happened when it broke out. It pulled back and tested that. It acted as support, and then it took off and went higher. And that's what you want to see. Until you see that, you can't enter with the breakout. So the only time you enter in the direction of the breakout is once it breaks out and pulls back and tests it and finds support on the high side, or breaks out and pull back and finds resistance on the low side. So what was resistance should turn into support before you can buy, and what was support should turn into resistance before you can sell. Watch that part a couple times if that doesn't make sense. But here's some more things to notice about trading range, and congestion works the same way. There's always a bias. If the bias is to the upside, prices are likely to break out and succeed to the upside. And if the bias is down or the prices have been trending down, when you go into congestion, the breakout's likely to succeed to the downside. But what normally happens is even on congestion, even right here, it's hard to see, but look what happened. See this stem sticking up here? That's where prices broke out. But guess what happened? It didn't keep going. It pulled back, and it tested this area. It closed right there, and then it went higher. So it still pulled back and tested it, even in that little bitty congestion area. It's harder to see, but I can promise you it's there, and that's what it did. And let's see if we can find another one. Notice here's a little congestion. Look at the let me just put the line right there and the other line right there. And you can see that little congestion. And look what happened when it broke out. There's the sim. It pulled back and then it went higher. And so, and notice we traded up into that little congestion area. So the buy says we'll probably succeed to the upside. I'm surprised it didn't break lower and then turn higher, because it'll do that a lot. This is just a bigger trading range right here. And again, it's no different congestion. It's just a bigger area. Look what happens here. We go into this trading range. It breaks out the low side. What does it do? It fails. So if you just shorted right there, a few minutes later, your stop would have probably been up here and would have got filled, and you would have got stopped out. So, and guess what would have happened if you bought up here? You would have bought the very highs before it went lower and went out the low side and hit your stop. And we see that over and over. Notice what it finally did when it broke out up here. It came back and tested it once, and then it even came back and tested it again before it finally continued on in that direction. So what was resistance across here, I'm trying to get my line right, turns into support, and then it goes higher. But notice what was support down here can never act as resistance, and so it gets back in the range again. And so it's real common for prices to break out both sides once or twice, depending on how big the range is. When the trend is up like this, this is where you want to enter, down here on the breakout. And guess what? If you'd have bought down here, you'd have bought the very low before we went into this big rally. Imagine what you could have done knowing this trading range here. You could have sold every time it came up here and bought every time it came down here, and you would have had 1, 2, 3, 4, 5, 6, 7, 8 winning trades just for a nice 4-tick scalp or so. And only one of the breakouts would have got you a scalp. But if you had followed the rules and waited on the breakout pullback, you could have been in this thing all the way to this high before you got this sell-off here. So hopefully that makes sense to you. You don't enter on breakouts, because most of the time you will lose money. And I see website after website teaching this, and that's what most traders believe. But the price action will show you otherwise. So this is why we don't enter in congestion, because normally it's going to snap back. And I can show you over and over where it snaps back and then continues on. And let me find another little congestion area right in here. This was a little trading range or congestion area. Look what happened. It breaks out. It snaps back, tests it to the tick, and then it turns down. And again, you will see that over and over and over. Here's one. Notice that little congestion there. Look what happened. It broke out the top, snapped back, then it went out the top, and it keeps snapping back until it finally sells off, and then it breaks out here, snaps back and tests that side, and then goes lower. Here's one. Look at all that little congestion. Look what happened when it broke out. It snaps back into the range, and then right here on the low side, it breaks out and pulls back, and then goes lower. Breakout, pull back short. Here's another little range right here, a little congestion area. Look what it breaks out, and it pulls back in there and then turns down. And you can see it on the smaller versions, and you can see it on the big ones. Here's another one. Look at this, all this overlap. It breaks out and then it turns down, and look what happens. It breaks out down here and it pulls back and then continues on. And I can show you example after example after example of that. And so that's why you got to be careful, and that's why you got to understand the rules and know what prices are going to do when they break out of these trading ranges and are out of this congestion area. And so hopefully that makes real good sense to you. But just remember, the only difference between congestion and a trading range is the size of it. And when you get these little small areas, that's just congestion, but they're still just little tiny trading ranges, and you got to trade them as such. And there's no difference in the way they work, except it's on a more micro scale than it is on the bigger scale. And you can find ranges that I love to find a range like this right here that there's enough room. Really, I like bigger ones than that. When you find a day like this one, well, even this one's pretty tight, but sometimes you'll find a day where the range is 7 or 8 points. We hadn't had any. We've been trending a lot in one direction or the other lately. But if you find a day where you get a range at 7 or 8 points, every time you get to the high, you can trade that down for 7 or 8 points, and you can trade it back up for 7 or 8 points. So um, just remember the rules. Read this article a few times if necessary. Watch the video a few times. Hopefully it makes sense to you. And understand that we do not buy or sell on a break out of a trading range or out of congestion. We look to fade those moves, or we wait on a breakout pullback that turns into a breakout pullback long like this right here, or a breakout pullback short. Let me find one of those. You kind of got one. Anyway, I don't want to waste a lot more time in this video, but I showed them to you earlier, how it would break out and pull back, and there's a good example of a breakout pullback long right there. We broke out, we pulled back, we test that upper side and go on. And I showed you the same thing right here. You break out, you pull back, you test it, and then you go on. So I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.